Misty, go ahead. But there are people who are investing during this time. SDAC did, Tech Coast Angels did, Next Wave Impact, the Global Social Impact Fund that I'm involved with has done it. I think no matter what, anything that is being done now or later, it's the same sort of 5 M's of investing and going forwards. Market management, momentum, business model. And so I think I'm missing the 5th one, but I can't remember what I said. But anyways, all those things are important for investing, and anything that you want to launch now is great. The pandemic will not be around in 6 to 1 year. There will be, you know, sub-pandemics, but know that you need to survive past that as well if you are super uber focused on the pandemic. So that's my 2 cents there, and I will pass it over to the fabulous Misty.
I don't know about fabulous, but I'm practical. Just a quick word on investment thesis. Jen can talk about hers too. Mine is entirely different than Sylvia's. I've been investing, I invest with the family fund. If you want to talk about how to become an accredited investor, let's just quickly go the definition of accredited investor. Accredited investors have $1 million in net worth that don't include the house they live in, or $200,000 in income, or $300,000 for a family for the last 2 years. Those are kind of the basic criteria. So if any of you have the question, like, how do you become a millionaire? Mine is self-made. My path's super, like, ridiculously practical. I can't see you guys because I started the screen share thing, and now I've shut off all my, I can't, like, I'm not getting, I need the feedback here. So for me, it was $50 in savings account when I was in high school and college. And some point in college when I was making just enough money, I started putting away $200 a month, and I invested it well. I invested, like, in some stuff that did pretty well. And I did that consistently for 20 years. That's my path to millionaire story. It's not a sexy path. And so it's the combination of good hard cash that I saved, plus the retirement from a couple of jobs that I had. So I always max out whatever I could put into my 401k or whatever, and doing that little bit of extra on the side, a couple $100 a month, which was a boatload of money when I was in college and straight after. But it got easier, right? I made that commitment. And so if there's one thing you want to do for yourself on the path to millionaire, it is understand compounding interest. Like, go figure that out. If you can understand compounding interest and you can start to make decisions about your life using compounding interest, that's, like, probably the best advice. Maybe some of the rest of you have some other advice, but that would be mine and my path. So with my family, with my dad, my brother, we invest together. We only invest in ag. We only invest in things that work in sandy soils at high elevations. We only invest in Colorado, and we only invest in guys that my dad trusts, right? Like, so ours is like a weird, like, it is clear in the power structure of how I invest with my family, who's got all the control. It's my dad. And we've never lost money. And a couple of times he's strong-armed somebody else's parents, right? Like, so that's part of the deal. As we make the investment, we end up getting to know the whole family. It's like, that's more of a, like, I grew up on a cattle ranch in Colorado. That's sort of my family history and ethos. And, like, everything you ever saw about a cowboy movie, like, I heard that's the way I heard. So my investor thesis looks totally different than Sylvia's. I don't think that we've got a woman or a diverse founder that we funded ever. And we don't have nearly as many deals. We've got about half a dozen deals right now. So that we've accumulated over kind of a long period of time. So Jen, do you want to say a quick thing about a thesis for you? Because you're working on it.
Yeah, exactly. It's a work in progress. I've learned so much from these 2 women. So just so you know, I'm like a late bloomer into all of this. Like I said, I met Misty 2 years ago, and that changed everything for me. Going to be part of the conference, like Misty was saying, you learn a lot. Like, it's to train people. So I have learned so much. I've I've made a lot of mistakes along the way, but it's good going forward that now I have such a better understanding of just angel investing. Everything that both of them said is so true. I tend to align a lot with what Sylvia's thoughts are, and we invested 3 women founders at this last angel conference, which
And they're
was
all
super exciting.
diverse. All three are diverse founders as well. So just
Yeah.
FYI too. So we're doubly awesome.
Yes. Yeah, so that was super exciting. So I'm kind of crafting like what I believe in, and you know, as I learn things and go through this, one of the things I want to say about the Angel Conference also was, so I went through it last year, and I was real scared a lot of times to ask any questions because I felt like a little out of place and like a little like, I don't know if, you know, I felt like other people know a lot more than I do, and I didn't want to say anything too stupid, which has been, we have a women's group that we meet with now that I can like ask them. And then my confidence has grown tremendously about this. But yeah, so I guess that's where I'm at as far as, I was a late bloomer. I started 2 years ago just with the Angel Conference. My husband and I have invested in a couple other things too, but I'm learning. And then this year, because I had mentioned to Misty and Sylvia last year, like, oh, it would have been good to know this stuff up front, they created a boot camp. So we had a 2-day boot camp where we got to like learn so much stuff before we even started looking at the deals this year. So that was really awesome.
Yeah, that's funny. Like Jen, it's cool that you say that, you know, like we've inspired you, because you have been much of the inspiration for how the second cycle went. Like it really did drive a ton of things on your feedback and your one other thing that I hope you notice is Sylvia and Jennifer and I are all super, super different, but we are all connected to each other and there's a commitment between us. So I think that we're starting to see this happen, especially with women our age, where we do not play like the women that came before us, and we don't play like we did 20 years ago. We play like with a tremendous amount of power and trust. We play with super high degree of trust all the time, and we hold each other accountable, and we support each other in public and privately too. So it's a
and I think one thing that is similar to younger age investors, our age and any age, is that trust is the most valuable currency of any investor, period. Going from angel investment to VC, you'll see here this slide that Misty has. All that is based on trust. And so I talk about it as tremendous reciprocity between you and us with sincerity and transparency. That is trust. And that piece of it, transparency, trust, reciprocity of learning from each other. You just heard like how we're super supportive of each other. So that's one thing that's not different. That is the same across everything. So go ahead, Misty.
Yeah, so okay, so I'll jump quickly to slides. I think I've just got 4. So this is a much bigger presentation. I think, Tanya, did you share this?
I actually did not share. Oh yeah.
Did I give this to you? Okay, it's a Prezi. You can find it. I'm not even sure what it's called actually. But this is if you play in this space, you'll see this exact slide a whole bunch of times, this big chunk on the left. So there's this has become a pretty popular one, and I haven't seen anybody who does it better. So across the top, can you guys see my mouse moving across the top?
Mm-mm.
Oh yeah. A bummer.
Yeah, no, it is.
So I always love to work on Zoom because it feels like you can look over somebody's shoulder. Like you should feel like you're looking over my shoulder. So this across the top, ideation, innovation, prototyping, introduction, growth, maturity. Those are all stages that we see entrepreneurs go through. So, and the companies go through the next level. So this proof of concept, pre-seed, seed and startup, early stage, later stage, right? So you see the curve, you know, that it takes to grow a business. And then down here, it's like all the different kinds of capital that there are. So there's a high expectation among angel investors that we see entrepreneurs self-fund the first part, and that we see a friends and family round. We almost always are looking for those things, but they're not like we're going to look for them, we're going to push for them, but what we're really looking for is we're looking for evidence of your commitment, right? So if you have no cash to put into the business that you've started, that's not necessarily a deal breaker. If you can demonstrate your passion, your commitment in other ways, right? You know, I've had people walk in and say things like, I gave away my TV And every night after work, I only work on this for 4 to 6 hours, and I only do this on the weekend, you know, and I've done that for 3 years straight, and this is the progress I've made as a result. You know, like as an investor, you're like, oh, okay, well, these guys are actually really serious, and that feels like an investment to me. So if I can see you and I know that you don't have cash, you can tell me that you've made an investment in some other ways, that's super helpful. We do kind of expect friends and family, and I have seen companies, like we had a lady, I think Jen and Sylvia both know this particular entrepreneur. She raised the money at her gym. She's a Muay Thai fighter, and she was going to practice, you know, 3 or 5 days a week, and she's talking about it the whole time she's fighting with her sparring partners and whatever. And at some point, one of them said, like, when are you going to give us a chance? Like, you keep saying you're raising money, but you haven't asked. And she raised $70,000 with the people that she practices with at the gym, right? So that friends and family thing, it can look like not all of us have friends and family that we could just go to and say like, hey, you know, great aunt, what's up? You know, like whatever. Could you loan me $100,000 to get this business? Let's have those kinds of assets in our back pockets. And then that's where we come to the angel investing, right? So angels will bet on an idea when it first starts to show some progress and traction. And you've got to have an MVP. That didn't used to be the case, but pretty much you've got to see at least that, some early users, something that demonstrates that you have both a real market opportunity and a path to a customer. That is the space where we really see angels. So I'm going to kind of leave it there. That's it gets more complex after that, and you got lots of time to learn about some of the other funding structures that are out there. But I want to talk for a second just about who angels are. So most angels, so this is information from the Angel Capital Association, which is a big industry association that works nationwide, but we see them a lot in our, like on the West Coast area. They kind of keep track of this information. It's not necessarily publicly available, so it's all self-report because angel stuff doesn't work the same way as venture capital does. But most angels have a net worth of less than $5 million. There are about 300,000 active angels in the United States. And this is 2015 numbers, so I haven't seen newer numbers than this, but I hope somebody's working on this. 2015, there were about 77,000 deals. And angel investors invested about $24 billion. The average investor, like on a deal, the average size of the deal was 345, with investors putting in 10 to 50,000 a piece. So that means that most investors are working together either in a small group or as part of a more structured group to raise that money. We don't see a lot of investors that are doing $200,000, $300,000 a pop. Most investments we see are in the 10 to 50 range, most of them in the 20 to 25 range. So any questions about that piece?
Any questions out there?
Okay. All right. I'll click on a little bit. So this is an hour-long presentation that I'm shortening to I'm just giving you what I think is the best stuff here. So I don't have to just zoom through it. That's why it's important. If you're trying to raise money, this is the basics. You're going to do roughly 10 slides, 8 slides, 12 slides, somewhere right in there. Your slides are going to cover these 10 things. So you're going to quickly do the elevator pitch, and it's going to be clear and simple. So I'd asked when we first got on the call, several people got a chance to do that. So Street Eats, I asked like a few times because I wasn't quite hearing like what the name of the company was, but I got a good sense about that one, and I got a good sense about Karen's skincare app. Like I at least got a basic sense of what those were. So quick little briefly if you only had 30 seconds to tell somebody what's the simplest way you can lay out what you actually have to offer. Second, defining the problem, like how is the problem big in the world? And then third, how do you solve it? Fourth, how big is the market? So, and then fifth is how you make money. So all the things about the business model. And then by slide 6, this is where it says tech. That's the only place in a slide deck where you'll see, in a good slide deck, it's the only place where you'll actually see the product. And most people think when they start out, like, I've got to convince them that this product is really, really special. Well, we know your product's special. We know you love your product. And we know that your product does probably whatever you think it does because it's the thing you think about all the time. But for investors, we're looking for so much more than that. So whatever you're thinking about talking about the product, you're probably going to talk about it a lot less than you imagine, at least in the first meeting. And then next is the competition. Competition is super important for a couple reasons that I'm going to talk about in a few minutes. Your marketing and sales activities, your team, and then I have it listed here as the ask. Mostly we hear it called the use of funds, but it's how much money do you need and what are you going to use it for and what will the investor get back? So investors are awesome, but they're in it to make money. So just keeping that in mind. We don't have a ton. I work with a ton of impact investors. I don't work with a ton of philanthropy investors. So quick questions on that. I'm going to talk about 3 of these slides in more detail. Okay. So you can see there's a lot more to this. All right, so this is the competition slide. And we see it a couple of different ways, but this is one of the more common ways that we see a competition slide. So for our, just for the class for tonight, I'm gonna say that the name of my company is Smooth Blender, and I've got like the world's coolest blender. So by now in the pitch, by the time we get to the competition slide, I would have told you about how cool my blender is. And here I'm telling you about how my blender compares to who the other big competitors are in the market. And I'm giving you a visual representation that says, my blender can do all of this. And some of these other blenders, and if you know, like if you're not even paying much attention, this logo at least looks familiar, right? So the Ninja, most people, like probably somebody here has got one of those on their counter and they're covered at home. And so for an investor, when we see something like that, we go like, oh, that's not just the competitor. And not only are you doing something cooler than the competitor, and if you're also going to tell me something cool, like you've got a patent on it, Ninja is not just your competitor. They might be your exit strategy. So a lot of times we look at the competition slide as both how well do you understand, the playground, and also what are your opportunities going to look like 2-3 years down the road. So this is probably the competition slide is probably one of the more important slides that we see in a deck because it tells us a lot more than just one or two things.
Whatever you do, do not say you do not have competition.
Right. So Jen, that's a super good point. We hear it all the time. I shouldn't say we hear it all the time because I hope we've coached people out of saying this out loud. Right. If you say you don't have competition, I basically have answers. One, I'm going to write you a really, really big check because we're about to do an IPO and I want in on your going to like conquer the world. Or 2, you haven't done your homework. Or 3, you don't know what you're talking about and we're done. Right? So unless I really think that you developed like the equivalent of the silicon chip, there's not really probably a lot for us to talk about. And we call that, for investors, we call that a laugh and run away point. Like you just smack your leg, like put your hand on your knee and you laugh and you run away.
Is one of the other, I don't mean to interrupt here, Misty, but is one of the other laugh and run away points when people say that my target market is everyone?
Oh yeah, that would be the other. Yeah, that would be the other one.
And the other one would be I'm capturing $100 billion market. No matter if it is that way, you need to understand what that focus is. That goes towards that customer as well. Right.
Or if you say you're doing a safe, we always tell investors laugh and run away if they say the word safe. Safe is an instrument, and it's one of the mechanisms that you use, the legal instrument that you use to make the investment. It's a sort of a Techstars tool, and it's not a good one for investors. It's great if you can find somebody who will sign a safe. It's super for entrepreneurs. You should try and do that. But you know we're coaching investors to do the knee slap and run away. So. All right, so then I have one other slide after this, and then we just want to leave it open for questions and to get your feedback on the conference. This is an ask slide. So this is a use of funds slide. And so you'll see like the way this pie chart is listed out, about 2/3 of the money is going to go to marketing and sales. And if you think about like, how is the investor going to get their money back? Is the money that you get from them, is it going to go into some kind of product development that can create a 10x return? Probably not. Is it going to go into some kind of administrative, like cost cutting, efficiency measure? Probably, and get you a 10x return? Probably not. One of the only ways that you can get a 10x return is to fund somebody's sales strategy. So most of the time this is, and you can't just say this, you can't just say like, it's all going to go to marketing and sales. You got to have a path for that and be able to demonstrate, like, we know that our customer acquisition cost, like the money that it takes us to get a new customer is $8 a person. So if you give us $100,000, then we're going to have, 800, do I do my math right? You're going to have a lot of new customers, right? Like it's a number that you can calculate. And so here you see on this ask slide, we're asking for $400,000. The company right now is worth $3 million. We're offering it a 20% discount, which means like since it's a convertible note, when you go to the next round of funding and those notes convert to the stock, that you're basically giving them a 20% off coupon in that next round. And then how much money you've raised, what your sales are, and where you expect to go. So like an investor who's been doing this for a little while can start to calculate like, oh, if that goes out 2 years, then like I'll get my money back. If they think they're going to have like a 10x return in 2 years, probably not. But if it's a 5x return, then what does my money look like? And they can run a lot of those calculations. They see this stuff enough that they can run those and run them quickly. So, and then the last slide, so I wanted to talk about the market opportunity for, again, talking about smooth lender. We're saying that the total market is $29 billion, right? Which includes all the accessories in the kitchen. So, well, I don't really have all the accessories. That's not really what my addressable market is, right? My serviceable addressable market is this middle range here. So it's only $2 billion, but that is more, if I've got a blender that includes this particular group of money or market opportunity includes blenders, grinders, food processors, and juicers, right? That's a much tighter, more addressable part. And then your obtainable market is like, what do you really feel like you can do with the money that you've got, with the money that you're about to raise? Okay, so maybe you're just talking about high-speed blenders with attachments in Southern California and you've got a strategy that says, I've got a relationship and I can get my blenders into every Costco and every discount store in LA, Inland Empire, and San Diego, right? So maybe that's your $200 million opportunity, and you have the capacity, you can demonstrate you have the capacity to execute on that in the next, 6 months or 12 months or whatever that is. So there's a couple of things here. So this also shows that my assumptions show that the projected sales are going up, right? So if we look at historic sales, they were lower, and then overall sales are going up. It's not a super crowded market. That the 2018 actual sales were 1.5 billion. So I've got to be able to address this question about what's the difference between this 1.5 billion listed here and this 2 billion here. And hopefully I've got a really, really great story about that. And then we're going to say that the annual growth rate is going to continue to increase because of increased drinking, because we're focused on these two segments, right? 70% of our new sales are going to be for margarita lovers, because we've got this special magic thing that makes the best margaritas. And 30% of our new sales are going to be for, people making organic baby food. And maybe they're connected. Maybe you drink enough margaritas, you have more children. I don't know. That's like, be prepared to tell what the story is. But those 3 slides, use of funds, the market opportunity, competition, those to me are like 3 of the most important slides in your deck. And so I thought I'd just cover those. And that's it. That's the whole talk.
I think that's perfect. It's nice having that sort of condensed meat and potatoes, getting down to the core of what you're looking for.